All right. Good morning, everybody. Looks like a bullish cumulative delta coming in. Yay. All right. TGIF, right? Japan up 1% and the Russell down 0.25%. Everything else just kind of fiddles through the middle. Hong Kong at 0.5%, Dow less than a quarter, S&P basically flat, and same thing with the NASDAQ. So after that massive move yesterday, right up into the call wall, we're now seeing a little bit of digestion. And this is where asking that question, did we move too far, too fast? Really, it has value on a day like this. Market Watch doesn't have anything scheduled today for economic calendar. Same thing with Finance Juice. If you went over and looked at their prepare for the morning piece that they put out, they didn't have anything for today either. We're seeing European central bank speakers. Christine Lagarde said something earlier, and right now there's somebody else, this guy right here, I believe, talking on them not raising or cutting. So they're holding just like the US is holding. There's really nothing else on the table today. So yesterday, Fed Waller gave a speech, and the title of that speech was, "What's the rush?" And in the speech, he basically made the argument for, we don't need to cut, and we shouldn't cut unless we break something. I mean, he didn't put it in that word, right? But they would rather wait until something breaks than cut early and see inflation come back, right? If they're going to be wrong, they'd rather be wrong because they waited rather than being wrong because they cut too soon. So that's kind of where their argument is at. So the China ADRs are up this morning. We'll dig into it a little bit and see if it's just from playing catch up or not. It's interesting to note that NVIDIA also is up this morning. As much as it has already run this week, it's not done. It's hitting more. But that can put us into a blow off top scenario. So we want to be a little cautious with that. If we look at the ES on the week, you can see the simple, easy breakout and continuation and the distance from the 10. Right. So one of the things that you always want to focus on is the higher time frame, asking questions like, are we going to hit anything? Well, there's nothing up there. It's blue skies, right? So we're not going to hit anything. If we wanted to do any sort of a measured move, we can do something really close, say measure last week's range. We can do that. And we can plot those levels up. We just crossed through a 1, 2, 3, 6 zone, but we're a long ways away from a half back or, a measured move of 50%. So that's okay. I guess it can help us out a little bit. 50.97, if we happen to fade back, would put us about a half back through our own Globex. So that's not a unique level that we need. We go ahead and just turn that off. So that didn't help. We could measure the whole pullback that we had here. And then we break out of that range. So of course we can plot it to the upside. Next target would be 51.46. Okay, I mean, that gives us a little upside target to focus on. So we'll take that one. And then we can measure the current run. Now, to even validate whether or not we should have our FEB there, take it back to the first run. See where the 1, 2, 3, 6 was hit. We got the decision at that point, move it up to the new 1, 2, 3, 6. Or move it up to where we got the first pullback after that 1, 2, 3, 6. So it would be there or there. 51.43 and 52.59. The 43 is what we call the 111 warning center. If we back it up, 51.73 and 50.66. So there's no wrong way to go on this, but you'll notice none of them are really present, right? They're not very close. We have to go somewhere to even get tangled up into them. No moving average that you can put on that weekly or monthly is going to help because we're at all-time high, so we're above everything. We do have the call wall at the cog line, 51.11. We're kind of just holding sideways. This is a really tight range. The volume's really light, and we can see market maker move indications up here. So if we look at the tight price action and the low volume and the market maker move, this shows that the market is worried about something. There is an event on the horizon that the market is concerned about. Now, we just went through all of the economic material for the day, and there's nothing there. So what's the market waiting on? Why are they worried and hedging? Remember, hedging is cost. For us retail, a lot of times we can turn a hedge into a trade, just, literally putting it on as a risk on trade, speculative, and profit from it. But for the most part, it's just cost. They're not going to spend this money to buy this protection for nothing. So have a caution today. They wouldn't be hedging this early in the morning if it wasn't something coming out this morning, right? If it was later in the day, say like on Wednesday, FOMC days, they start hedging, after the market opens. So if it was late in the day, they would be hedging later in the day. This market is radically concerned about something. Even if we don't know what it is, we can still proceed with caution and be prepared for something to come out. And we want to just watch the news. Finance juice works really good for that. If anything radical does come out, it's going to hit finance juice, and then you'll know. $50.92 is a cog line, and our close yesterday is $50.93. It's close enough. And we have 51.07 for yesterday's high. So that's our zone right now. It's 14 points. We can add to that our own Globex low today, 50.92. And now we're at 15 points, basically. Really tight range. This gives us a half back from yesterday of 50.61. We can see it, it's this yellow line right here. But I'm going to argue on that if we start down that road, it's very unlikely that we're going to pause at the half back. We are well extended past the daily pivot point. This is an MDP at the moment, missed daily pivot. Yesterday was a missed daily pivot. So that's one. We use yesterday's today. We'll use today's on Monday if we can make it through the day without hitting it. That white line running across the screen is a voodoo line. I think it's called snow. And we're a long ways away from both ADR levels, but we're closer to the upper ADR than we are the lower ADR. Not by much. There's not a lot of edge there either way. Other than the call wall, which is really close, we don't have a lot of options levels until we get all the way down closer to 50-15, 50-11 cog line, that sort of thing. So a long ways off, all the way back down to the weekly pivot point, the previous week's close, and the 20-day moving average. This is a daily chart here on my right. The 20-day moving average is all the way down here. So as you can imagine, that'd be a long fall. Now, we did something yesterday that was very rare, and it kind of just added to the conviction that we didn't want to try to take shorts yesterday until later in the day. We broke outside of that ADR line, and then we expanded beyond it almost an entire, not even almost, we expanded beyond it a full deviation. Generally, just getting to the red line is what the market does every single day, right? It's day to day. That's the average behavior of the market. Go to the red line. That's a market maker, or that's the ADR half, right? So if it's a 50-point range, then from Globex Open, it's 25 points up, 25 points down, and that makes a 50-point range. If it's a 50-point range, we could just open and go 50 points in one direction. That would get us to the yellow line. What we did yesterday is expanded the entire ADR distance one more time. It's really rare. And when you've got that kind of flows coming in, you just don't fight the flow, right? And of course, the more people that tried to short it, the more it just kept pushing to the upside. Now, I mentioned yesterday morning before the open that it was one of those days where you want to watch for a correlated market condition. Everything that we looked at yesterday, from the NY FANG, the MAG 7, the Qs, the S&P, they were all just nonstop push after that breakout. And the adage that we use in the market about if we haven't broke out by 10 a.m., we very likely won't break out until after lunch. If you look at the market, the S&P, by 10 after, we hadn't really broke out. So then when we tried it later, failed. Tried it again through lunch and it failed. We had to get out of lunch onto the other side and then go. Now, the only time I've seen that not work, that whole phrase of if we haven't broke out by 10, we're not going to, is if we get econ, right? We can get economic data that comes in at 10 that blows us clear out of the water. or when the EU closes. So, there is those days where if there's economic data coming in at 10 o'clock, you can't use that phrase about, well, we haven't broke out by 10, so we're not gonna. We had a very narrow Globex, and we had a very narrow IB last night. IB is initial balance. Think of it as the open range, but it's for Globex, and you don't get to pick the time frame. It's a 1 hour balance. So the market opens at 6. You mark from 67, the highest to the lowest. That's your IB. I have seen newer places or a more modern version of initial balance where they talk about it being in the regular trading session at 9:30. I'm not going to disagree with them, but the original initial balance was started way back in the day, and it was for Globex. So if you're using something at 9:30 and calling it initial balance, you can call it whatever you want. Look it up a little bit. See what IB is. A very narrow IB indicates that they didn't get their work done and that there's work that they could do. If you want to put it into some generic term, if Sally's got 10,000 contracts that she needs to move today and the IB is very narrow, the volume's been really light, it implies she hasn't got her work done. At some point today, she's still going to need to move those 10,000 contracts. If it's already expanded really far on the morning, we have a Globex that's made wide moves, then kind of implies the work's already been accomplished for the day. Got to kind of ask at that point, what's going to continue the move? This is compressed. It's building up energy. It's waiting on something, and we don't know what it is. So just proceed with caution. Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We're not going to lose this point of control anytime soon. Through the end of the day today and into Monday, we'll start to lose a large part of that point of control, but there's still no other place with this much volume except for down here at 49.77. So the only way that won't be our new point of control is if at this level, we actually stay here and start getting a whole lot more volume, which is absolutely possible because a lot of times we see big volume at the highs. We don't have a new VPOC to carry on for today because we are right at where it was yesterday. Notice how much volume was up at the high yesterday. Now, granted, we spent a considerable amount of time there as well. But now that that's already ended, we can't really see what the TPO was. I'm going to try something. Maybe we can see it anyways. We'll just turn off the Globex. And there we go. That gives us the TPO for yesterday. And it's got the same point of control. So we spent a lot of time up there and we got a lot of volume up there. That kind of answers the question. Did we hit a ceiling? Nope. So no VPOC to carry forward. There's nothing over our head to hit. So there's nothing up there. The VPOC that we did have, or that we still have, long ways off, 49.77. It's not going to be something we should be concerned with today. Even if we did make moves to the downside, there's so many things that we would have to hit and get through before we could even think about getting to that. We are 1.3% above the 10-day moving average. We did not move too far, too fast. It does not owe us a pullback. We're not overextended. We're not overbought. On the shorter duration time frames, that was a really big move. But look at the 10-day and how many times we've been farther than that from the 10-day. Now, I will say that there's an average to things, right? And if you look back, we're at that spot on average, especially for, say, this year. This is where we generally do turn back. Either we turn back and or we hold still and the 10 comes up to meet us. Either one. We can see for at least this year, we're right at that spot. The reason that we watch this, because it's not constant, right? There's times where we go a lot higher than that consistently, consecutively, again and again and again. You know, we're breaking through twos and getting into the threes repeatedly. And then there's times like now where we never make it to two. So if we're looking at it in relation to what we've seen just this year, we're overbought. We're at the edge. We are overextended. We have moved too far, too fast, and it is very likely to pause here. But that's kind of short-sighted to only look at 2024's data and not look back farther. And once we do look back farther, we can see, yeah, we're a little stretched, but we've been farther away from the 10 than this and held that distance. We're 3.9% above the 10-week. And while that is not the most extreme, it's getting up there, right? There's 3 times that we extended beyond this level that we can see just on the screen there. And we start backing it up. Just get rid of COVID because it always messes with the chart. Plenty of examples where we've been higher than where we are, but not very many. And most of them didn't stick. For the ones way over here to the left, that was still the COVID recovery. And no matter what sort of technical analysis you do, that ripping rally usually breaks most technical systems. The world went from being turned off to turning back on again. So it's a weird time in the market. Get that and set it aside. And then look at where we are. It's not very often we get above this level and stay above it. That we pause and let the 10-week come to us, or we turn around and go back towards the 10, or both, because both can happen. The 10 comes up to us and we slowly grind back down to it at the same time. So we can go higher than this. I don't want to make it sound like we have to turn around and go back or we have to pause. We can go higher, but it would be a headwind. It would be a fight at this point to extend the gains. The easiest analogy for that is take a runner, somebody who runs marathons, and start piling weight on their shoulders. Sure, they can still run the marathon, but that weight's going to hold them back. It's going to slow them down. And don't just put a little weight on there and stop. Continue adding weight. The more they run, the more weight you put on them. That would be the same thing with the S&P trying to continue to go higher. The higher it goes from here, the more weight the more resistance it's going to have. It needs to pause. So we've got next week's range, and we still have the discussion of this week's range. We're supposed to close inside this box at the end of the day on Friday, 8 out of 10 weeks. Now, we already knew that this week was a volatile week because it was bigger than last week with less days. And even with that, with a bigger range, it wasn't big enough. We broke out of it. So statistically, we should fall down and close back inside the box. I wouldn't put a bet on it just for that. The statistics are nothing more than crunching the numbers. And we've seen unprecedented moves with the entire market over this AI. Somebody was comparing bubbles, and they said that the 2000.com bubble was 25% of the marketplace. I'm screwing his numbers up a little bit, but I'm close enough, right? I'm not quoting him perfectly, but you'll get the gist. If that was 25% of the entire marketplace in the .com bubble, compare that to the AI bubble, which is 45 or 49%. Either one of those two numbers is enough to freak you out. Let's just say 45 is the smaller number. So if you think the .com 2000 crash was bad when that bubble burst, think about this AI bubble when it finally bursts, because it's almost 50% of the marketplace. How's that for fun? So the fact that we should close inside this box 8 out of 10, I wouldn't try to take a short today just on that alone. That's not good enough. Need more. We can take this range and set it on to next week. Next week is actually a 5-day week compared to this week, which is a 4-day week. And next week's range is a little bit smaller, but looks are deceiving. It's a 5-day week, and we're comparing it against a 4-day week. The volatility is a lot less, not a little bit less. It's less because there's actually 5 days, and even those entire 5 days of measured volatility doesn't equal the 4 days of volatility that we had here. Now that box is not set in stone. It won't be locked until 4:15 tonight. So it can still move. It can get wider, narrower, whatever, right? All right, so there's your quant levels to the downside, and it gets you to the ADR half in nearly equal spaces. All I did is measure our own Globex high to the Globex low and project that down 50%, 100%, 150%, and then there's the ADR half. Do the same thing in the other direction. And there's your top side breakout, which gets you to the ADR half the other direction. That'll at least get us started, right? From there, if we do break and start heading to the downside, we can start focusing on yesterday's price, laying out those levels like the half back and all of that. All those pivot points that we mentioned earlier. So the China ADRs are up the most. If we just ignore the FANGs, it's like a triple leveraged FNG FANGs up. So China ADRs, JD, Baba, Baidu, Neo, XPEV, and then the FANGs or the Mag 7. Semiconductors behind that. And that's it, right? We get any lower than that and we're below that 0.5%. So it really not a lot that's up this morning. China, for its own reasons, they're still doing that shadow stimulus and forcing banks not to sell and then semis. Things that are down this morning, nat gas, Bitcoin. So we're finally losing a little bit of liquidity. Energy. And really that's it. Nat gas is still up almost 10% on the week. So it might be down, 3.25, but it's still up almost 10%. Everything else is flat. So, yesterday it was throw a dart at the barn. Anything you hit will run. Today is a stock picker's day. You want to really hone in on the things that are moving and be very specific with your selection. Generally speaking, that leads to themes, right? The China ADRs would be a theme, or pot stocks. They're doing good this morning. They would be a theme. What you want to do is take that ETF like MSOS, open the ETF up and see what names inside that ETF are running this morning. XXII. It's kind of a real estate name, really. It's real estate for pot companies. And it's a penny stock at this point. Tilray also up this morning. I remember when this IPO'd. Looks like we're attempting an inside day breakout. That would be nice after this scoop pattern, right? Start to form the other side of this cup. Still, it's a very cheap stock, and you can see the trend has been to the downside. So, we're not talking about long-term swings here, just what's moving for some day trades. So we got pot stocks and we got the China ADRs, and that's not much. Crypto was down. So, from a short point of view, it's not really that bad of an idea to see what's going on in that direction. If they've run enough to the upside, they could be a decent short. It's a very extended topping pattern. On the daily, it's just a nice flag. All right, so with Bitcoin, we had a little bit of that weakness, but you can see how it's really respecting this half back. That's your short. If it breaks that half back, then you've got a nice play back below 23. It's a dollar move at least. And it has weekly options, so at least there's some form of liquidity in here, or it wouldn't even have that. I mean, it's not overly exciting, but there's something. You should probably be able to do that same thing on all the others. We got coin here, but think Mara, Riot, Hut, Hive, Coin, MSTR. Coin's a little sloppier, right? It already got through that level yesterday and last few days and has been able to hold the line. And Riot's early. It didn't wait. It's already underneath the line. BITO looks like the best one of the bunch. Cleaner. And then of course there's semiconductors. So if NVIDIA goes today, I don't see that it would, but if NVIDIA tanks, then everything with the semiconductors are also going to take. But that's not the base case argument. The expectation is that it's going to hold the line, right? It doesn't have to dump. It can just quit running, slow down a little bit. AMD's got this really tight range on the daily, and kind of a liquidity zone up there, unfinished business, if you want to call it that. Breakout above 185 on AMD, you can measure this entire zone and plot it to the upside. That would be the kind of targets. That's not what I was looking for. So 197.75, you might as well just call that 198 and 210.5. Of course, you know, we're talking swing stuff, but this is a really nice range. And it's this liquidity that we got to be concerned with. Any unfinished business here, if we get through that, then we can focus on these higher levels. So AMD is not looking too bad. For a swing, for a continuation, all things considered. All right, there's something wrong, so there's something up. Be careful today. Watch the clock. Keep your eye on the news. Let's see, the macro calendar is empty today. Investors will focus on individual stories. Crude is lower. Some kind of China December new home sales. Come on, there's got to be something good. Intel, no, INTU. had strong earnings, but it looks like their guidance wasn't that good. Yeah, I'd say they're strong guidance or strong earnings. Yeah, they maintained their fiscal guidance, prior year guidance. Carvana, pushing to 100. So there's just nothing out here this morning to account for the hedging. It's not even time to roll yet, right? So it's not like they're in there trying to roll anything in the futures, but they are hedging. This is not my opinion. I'm not guessing. They're hedging, and it's cost. They're not going to spend that money if they don't have to. So they're worried about something. We don't know what it is, but we know it's going to be in the morning session, right? They won't hedge in the morning for something later in the day. They'll wait until after the open. So unless they're worried about one of these ECB speakers or, Dally last Friday, daily, she was chipping teeth around 2 o'clock in the afternoon on Friday last week and dropped the market pretty hard. But again, that's afternoon. So I don't know. One thing that we can do is just recognize that the threat is there, right? Even if we can't understand what's going on. Look at US dollar Japan. This is a crazy drop to the downside, and it should be sending the S&P and the NASDAQ breaking out, and we got nothing, right? Like no reaction at all. 10-year dropping off of that 4.35 really hard. We're not inside day breakout yet, but these kind of moves, we should be feeling this, and we're not seeing anything. The move down in the dollar. It's not as extreme as US dollar Japan, but still nothing, right? A little rally up since 4 o'clock in the NASDAQ, but more of a reciprocation move than anything else. You measure that distance from VWAP and then plot that same distance above VWAP. You're just looking at a reciprocation play at this point. Got nothing. So these are extreme moves. This is violent. There's something going on. They're hedging the heck out of it, and we don't know what it is. So proceed with caution. Everybody have a good weekend. I'll see y'all next week.